phone was put on, the guy's phone was on, so hopefully nobody heard anything untoward. Welcome everyone, thank you for having me, Tim, much appreciated. I guess my answer to the question of the panel is really yes, I do believe in tax competition and I do think it's healthy, and that's really where my comments will be coming from today. I am based in the Channel Islands in Guernsey, but my business, Channel Islands Securities Exchange, has offices in both Guernsey and Jersey, so across the Channel Islands. I think, as the two speakers before me have said, so-called tax havens have been given a very bad name in recent years, and they're seen as a blight on the land, a blot on the landscape in the post-crisis sort of austerity world, which, judging by media this week, everybody wants to see wiped out without a second thought. I think I'm really here to give the perspective of somebody from a low-tax jurisdiction. And I sort of have 4 or 5 points really that I want to try and get across in hopefully 10 minutes. But I could probably go on about this all day. Firstly, I think, first of all, you have to consider what actually is a tax haven. It's now become a pejorative term. I don't think it was originally, but certainly now. If you look at the EU definition of a tax haven, it is related to secrecy, non-cooperation, tax evasion, not being compliant with the Code of Conduct on Business Taxation. None of these things apply to, in particular, the Channel Islands. I'm not going to stand up here and defend Panama or any other offshore jurisdiction. My knowledge comes from being in the Channel Islands, so that is the angle that I'm coming from today. Guernsey and Jersey are low tax jurisdictions, yes. Our general rate of tax is 0%, but we do pay tax ourselves. The highest rate of corporation tax is 20%, and the personal tax rate is 20%. We are a low tax and then tax neutral jurisdiction, but I think secrecy is certainly something we've never had, and that's again been very misreported in the media. We have never ever had banking secrecy, but we are confidential. We do respect client confidentiality. That's a very different matter. So, for example, in both islands, but particularly Jersey, there are a number of trust and company structures. These are typically no longer really set up for tax-specific purposes. In fact, they're more likely to be used for asset protection. Many clients who use jurisdictions outside of their own are in perhaps emerging economies, perhaps corrupt economies where there are significant issues at government level. They fear for protecting their assets, and therefore they put them in a jurisdiction with a good, strong rule of law that they don't find in their home jurisdiction. And that is often why Guernsey and Jersey are used for such structures. They may want anonymity. I'm sure none of us would like our bank statements plastered across websites for all to see. But obviously, as we've seen in recent weeks and months, the UK in particular, but across Europe, are calling for registers of beneficial ownership of companies to be made potentially public. Now, Jersey already has a register, a central register for beneficial ownership. Guernsey doesn't, but in both islands, our corporate service providers, so those who have to set up Guernsey and Jersey companies, are all regulated to the highest level, and they basically, as they are regulated, they are required to keep all details of beneficial ownership of companies. This information is made automatically available to competent authorities, so regulators or tax authorities as relevant, but it is not public. We have held that information since before the year 2000, and we regulate, as I said, corporate service providers, something which many major economies, including the UK, still do not do. So we feel we have a very robust system for recording beneficial ownership. And I think another reason that we don't think that information should be made public is because we have such high standards. So, for example, particularly in terms of anti-money laundering, anti-corruption and countering the financing of terrorism, where Guernsey, in fact, has scored the highest of any jurisdiction globally in terms of its compliance with the Financial Action Task Force recommendations for supervisory and regulatory standards. We are compliant, or largely compliant, with 48 out of 49 of those recommendations. That's higher than the UK, the US, Germany, France, China, and the United States, and everybody else. But the point is, we are up there with major global economies acting with integrity at the highest standards. And unfortunately, this doesn't always make the papers, let's say. Exchange of information, I mentioned before, very, very important. There is often a misnomer when you're reading about low-tax jurisdictions that people are squirreling money away in bank accounts in these jurisdictions. I can tell you now, if you have a bank account in Guernsey, the information of the interest that you receive is automatically provided to your home jurisdiction and has been since July 2005. Therefore, if you do not declare it on your tax return, you'll be found out pretty quickly. Again, something that man in the street, if you like, doesn't understand. And I think this is part of the problem with tax competition. There is not enough understanding of where we're actually coming from. We also are fully compliant with FATCA, both the US FATCA and the UK equivalent. And we were in the first wave of countries, both Guernsey and Jersey, to sign up for the Common Reporting Standard, which many of you will be aware of. So I think it's fair to say that we're very open gateways, we are very transparent, but we also respect our clients' confidentiality. And I've seen some of this firsthand. My previous role before joining the exchange was Chief Executive of Guernsey Finance, which is the promotional body which promotes Guernsey's finance industry across the world. And I spent some time in Latin America and in other emerging economies. And I was in Brazil speaking to a private wealth lawyer who actually received a phone call while I was there from a client who lived down the road from her, who was also a friend. She phoned from Canada to say, I am fleeing for my life. People have heard about my wealth, and I'm scared that my children are going to be kidnapped. I've moved to Canada. And she said, well, why didn't you contact me first? You should have structured your affairs in the right way, etc., etc. And they had been that scared for their life that the family had moved away. So I think there are concrete examples where too much transparency can actually be extremely harmful and invade people's right to privacy and arguably their human rights. And I suppose finally the accusation when you're looking at tax competition is that lower tax jurisdictions take away rather than contribute to major economies' revenues, for example. Somehow we're stealing it all away from other economies. And again, that is simply not true. There have been various pieces of independent research carried out. Jersey, for example, developed a report on their value to the UK a couple of years ago, and that showed that they contribute at least 180,000 UK jobs in terms of investment flows. During the financial crisis, again, another example, Guernsey provided 70 billion of liquidity to the City of London during the crisis to help uphold some of the banks that were obviously in crisis. We have no handouts from the UK. We may be a crown dependency in both Guernsey and Jersey, but we do not take handouts from the UK. We are fully self-sufficient. And one of our key contributors, both in Guernsey and Jersey, is the investment fund industry there. A combined value of assets under management of almost £500 billion. A significant proportion of that, although it is global business, either comes into or out of the UK, particularly in terms of the private equity industry, which of course invests into businesses here in the UK and in the wider EU, providing jobs and supporting, for example, UK SMEs. So the Channel Islands play a very important role in effectively harnessing that investment and being a conduit for capital flows both into and out of Europe. And also, something that's very important is who are the investors in these funds. So I'm just going to ask a question to the audience. Who here in the room has a pension? Who contributes to a pension scheme? Fairly significant proportion of you. Keep your hand up if you'd like to see a lower payment on your pension when you retire. If you'd like your returns to go down, put your hand up. Thought so. I'm glad you did that actually. Otherwise this is not wrong. Essentially, that's how you would be without low tax jurisdictions such as the Channel Islands. Pension funds understand the sophistication of the Channel Islands and the services and the structures that they provide for inward investment. If you're lucky enough to have a good salary, you might contribute over the pension allowance, therefore you're paying in taxed income. You then pay tax on the way out when you receive your pension pot on retirement. And arguably, when you die, there's some inheritance tax there as well. That's 3 lots of tax. Do you want another lot of fund level? Because that's what happens if you're not in a tax-neutral jurisdiction. That means that we will all suffer as a result of taking away some of that tax competition. Is it healthy? I think yes. Not just from Channel Island perspective, but also look at what the UK is doing with the asset management industry, for example. In the last couple of budgets, there have been a number of measures announced in order to make the UK's asset management industry more competitive, particularly with regard to Luxembourg and Dublin, who are even larger centres of investment funds, and who therefore the UK wishes to compete with. The UK has introduced a tax transparent vehicle, a tax neutral vehicle for investment funds, exactly the same as Guernsey and Jersey have been doing for a number of years. So for me, it doesn't sound like a common consolidated corporate tax base, and tax harmonisation is really around the corner. But I think that's obviously up for debate, and quite rightly in my opinion, because I think Guernsey and Jersey are intrinsically linked to here in the City of London. We have global international business. I believe that our business is robust. We act with integrity, we have substance, and we have real experts who have built up their experience over more than half a century as finance centres. And I think that expertise should not be overlooked, and the support that it provides, particularly to the City of London, but also the wider EU. I think that's really everything I want to say.
Good evening. As you may have heard from the introduction, I'd like to preface my remarks by saying not only am I an American economist, but I'm an American economist from the state of Texas. So you can imagine that I do have an opinion or two on the subject of taxation, and I'm happy to share them with you this evening. I would like to address the economic arguments for and against tax harmonization. The economic argument for tax harmonization is actually fairly straightforward. Individuals have some preference over private goods, which are produced by themselves in the marketplace, and public goods, which are produced by a public authority such as a government. Individuals will also tend to locate where tax rates are lowest. And so what you have as a result of this is various jurisdictions engage in what we might call a race to the bottom, and providing tax rates so low to attract economic activity that they do not generate enough revenue to fund public goods. And it would be better for all parties involved if there could be some coordination on a common tax rate. It's an example of what we call in economics the infamous prisoner's dilemma scenario. This is a straightforward argument, the conclusion of which is everyone would be better off in their own estimation if jurisdictions could coordinate around some common rate of taxation to provide desired public goods. I think that this is a valid argument. I'm not so sure it is a sound argument. The question is, does the conclusion in fact follow from its premises? I don't think so, for 3 chief reasons. First and foremost, and this is the reason that I personally find most convincing, this argument seems to assume that actors in the marketplace follow personal incentives, economic incentives, but the providers of public output are selfless utility maximizers of the public good. Oh good, I can see I don't need to go into too much detail on that. In all seriousness, in 1980, oh my goodness, I can't even remember if it's 84 or 86, that's slightly embarrassing, but a fellow named James Buchanan won the Nobel Prize in Economic Science, and his pioneering contribution was treating politicians as if they were people. Understanding that politicians too respond to incentives, and so they are not just selfless maximizers of the public utility. One ought not assume that they are wicked, that's equally illegitimate, but nonetheless the incentives that they face might result in them stewarding public resources less than optimally. So an argument for tax harmonization that assumes that all resources that are given to the public fiscal account will be efficiently allocated to the provision of valuable public goods is not an assumption that I believe is tenable in the 30-plus years of economic research that have prevailed since Dr. Buchanan won his Nobel Prize. So that's argument one against the standard case for tax harmonization. Argument two, I believe, is there are actually distributional effects from tax harmonization that will hurt the poorest among us the most. It is not, I repeat, not the wealthy who chiefly benefit from low tax jurisdictions. It seems that way because they get to take home a larger share of their paycheck as opposed to paying it to the public fiscal authority. However, what we know is that most of these taxes come from what we might call capital accumulation, the accumulation of saved resources for the purposes of investment in goods that are used to produce other goods. Capital accumulation raises labor productivity raises wages. That typically benefits not the wealthy in the long run, but the poorest among us. And so by allocating public resources, or I should say private resources, which then through taxation become public resources, by allocating them to the provision of public goods as opposed to capital accumulation, it is entirely plausible that wages for average workers will be lower in the long run than they otherwise will be. And of course, if you're a day laborer working for a wage contract, the chances are that you are not in the upper 10% of the income distribution. And so this is one argument that I think is significantly undersold. We talk about taxes as if, what about the wealthy, the effects on the wealthy? Well, I think we need to pay attention to what happens to all individuals at all points on the income distribution. And a very strong argument can be made that efforts at tax harmonization, well-intentioned though they might be, actually harm the poorest among us. And I think that's really unacceptable. The last argument that I want to make has to do with, again, the composition of public funding. The composition of public funding going towards the provision of public goods. And this is perhaps the most basic assumption in favor of the tax harmonization model that, again, I just don't think is true. It assumes that the public, all of us, have uniform preferences over the composition of public output. This is simply not true. Different individuals can and do prefer different mixtures of private and public goods provision. So tax harmonization, instead of resulting in individuals allowing themselves to sort by jurisdiction into whatever jurisdiction delivers them their preferred mixture of private-public goods combination, and in particular what public goods they get for the given tax price, we are left with a uniformity of jurisdictions that would result in many individuals not having their preferences satisfied. And so when you add up all of these considerations, it seems that the argument in favor of tax harmonization, and the logic in favor of it is straightforward as far as it goes, has numerous holes in it. And because of this, I do not believe that the argument in favor of tax harmonization is completely tenable. Thank you for your time.
Because the only thing I know about the economics of taxation is that I pay too much tax. I won't address the economics of taxation, but perhaps say a couple of words about the other issues that you graciously raised, because taxation obviously is not just about economics. It's about politics. It's ultimately about power and who exercises it over whom. And it also has to do with sovereignty, whether it's national sovereignty or the sovereignty of unelected, unaccountable supranational institutions. And this is clearly an issue that here in the UK we think about a lot these days. Before I make a number of brief points about the politics of this, let me take a step back and say how very grateful I am to this country, as someone who's not British, who's from Israel, in fact, from outside. The first reason I'm doubly grateful for this country, first of all, for rescuing my father. A Jewish British family adopted my father in the aftermath of the Second World War and provided him with a home. For me, Britain was always the country of liberty, the country of freedom, the country that essentially rescued us. And the second reason why I'm so deeply grateful for this country is that it created the institutions and many of the ideas of liberty, of democracy, of the rule of law, of sovereignty, of economic liberalism. Now I say this not only because I'm personally eternally grateful to this country, but because I believe in this country. I believe in its ability to reinvent itself, as it has done so many times throughout human history. And I get a sense as an outsider that unfortunately, perhaps many people in this country have become less believing in it, in the ability of this country to rejuvenate itself, to reinvent itself, and to move forward. It seems to me that too many people in this country believe that the history of this country began with the accession of the United Kingdom to the European Economic Community in 1973, and are so fearful of what would happen in the event that the United Kingdom would choose to redefine its relationship with the European Union. Now, Brexit or not, this will be a democratic choice of the people of this country and the people of this country alone. But let me just touch, because we want to address not just the economics of this, but I think that the politics of this as well. Let me just raise, for the sake of controversy, three, I think, pernicious myths about necessity of the continued existing relationship, essentially, of this country with the European Union. And this is intended to provoke debate. The first has to do with sovereignty. When we listen to the debate about the United Kingdom, about the EU, national sovereignty has somehow become a dirty word. Among those who seek to encourage the United Kingdom to remain within the EU, there is an attempt, I think, to suggest that old-fashioned national sovereignty, which is really not old-fashioned at all, is somehow parochial, outdated, xenophobic, and that the future is always the pooling and the transfer of more and more national sovereignty to supranational institutions. Now, I don't think that national sovereignty is parochial or xenophobic necessarily or outdated at all, just that I don't think that the notions of democracy and the rule of law, which are also 17th and 18th and 19th century notions, are irrelevant to our lives and our future. And I think some degree of pooled sovereignty is fine, but hijacked sovereignty is not. And I think we need to rethink the discussion about sovereignty and national sovereignty in particular in this context. The second myth, of course, is that the UK will somehow be weaker economically, militarily, morally, politically out of the EU. Again, I suspect that is something of a canard. I believe in this country's ability to adapt and respond to enormous challenges that this country faces and Europe faces today. Not just economic challenges, but challenges that will impact taxation policy and perhaps create an impetus for raising taxes across Europe, migration, the fight against terrorism, adapting to new demographic challenges and economic stagnation. Thirdly, a third pernicious myth, that the UK will somehow become a political or economic pariah if it should decide to exit the EU or fundamentally redraft its social contract with Europe. The idea, to put it in Barack Obama's rather condescending words, that the United Kingdom will be sent to the back of the queue if it were to go in a way that Barack Obama doesn't want this country have a plethora of alternative models of relationship with the European Union, extending anywhere from the EEA, which is probably not a very good choice for the United Kingdom, but also the Swiss model, which is a series of negotiated sectorial agreements with the European Union in those areas where it makes sense for the Swiss to have such agreements with the European Union. And there are other models. My sense is that Britain Unshackled will also not only be freer to renegotiate economic relations with the emerging powers of this world, but I think we haven't yet begun to internalize the positive effect that a renegotiation of the UK's relationship with the EU towards greater free market principles will have on other European countries. We haven't begun to have that debate. The history of this great nation, as I said, did not begin with the accession to the European Economic Community, and it will not end there. Should the UK choose to redefine your relationship with Europe and the rest of the world. In fact, I suspect that the UK's choice to assert its own way will not only be good for Britain, but ultimately good for Europe as a whole. Thank you very much.
As I said, we've had some time for some questions, so there's a microphone coming around now, so if you raise your hand, the gentleman in the back is first.
Thank you. I'm conscious that in circles of people who might be broadly described as libertarian or favouring free markets, that between people living here and people living in Europe, there's quite a debate as to whether Europe and Britain will be better off if Britain leaves. And I noticed Barbara Collins' comments before that we don't leave. And that to me appears to be opposed to the idea that Michael Gove has said that should we leave, we can become an exemplar of what a free and open society should be. One of the things that I think will lead to a greater degree of liberty for us and influence the environment over in Europe is our legal system. I'm not a lawyer, but my brother and father are barristers, and I explained the difference between our common law system that served us for 700 years is basically that you can do whatever you like so long as it's not banned, whereas the civil law system of Europe says you can do that which has been explicitly permitted. So I was wondering if Dr. Magen and any of you others would like to comment on that particular aspect, the difference between the legal systems, which really, so far to me, hasn't come up in the debates. Thank you.
My mic working? Yeah. Can you hear me?
Yes.
Yes. Terrific. Well, I have to confess, I am a lawyer for my sins, but I'm receiving therapy and I'm trying to recover. Hopefully, I'll get over it at some point. No, I think you touched on a very salient point. Firstly, we haven't yet begun the debate because of the uncertainties about what will be sort of the aftermath of a potential Brexit, and because I think there's a camp in this debate that wants to avoid that conversation, or at least to cloud it in very frightening terms. We haven't begun that very important conversation, and there's a real dearth of discussion about that. I think that when it comes to the legal dimensions of this, again, I think you take this in the right direction. I would make a distinction here. I think between two levels. This is the cradle not only of democracy but of the rule of law. Dice's rule of law, Hayek's rule of law, and my sense is that not only is democracy deeply compromised and sovereignty is deeply compromised by this decoupling of power and responsibility and accountability that we have in Europe today, but that the rule of law is deeply compromised by this confusion, and the freedom of the United Kingdom to go its own way in a legal sense as well could be very positive and creative. Every major change involves uncertainty, But I think what is so beautiful about this country, what distinguishes this country, perhaps what the United Kingdom has traditionally shared with the United States, and also Israel, if I might add, is optimism about the future. The belief that the future is glorious and that it could be made free and glorious. And I think that that's a very important message to send. The second dimension, of course, has to do with what Richard Posner has famously called the perils of global legalism, and the fact that the rule of law in today's international system has really mutated in sort of the rule of lawyers rather than the rule of law, and that many of the rules that apply to you are not made by you. They're also adjudicated by judges, whether in Strasbourg or elsewhere, who are not accountable to you. And that decoupling of tremendous power of law from accountability and responsibility to the people, I think in the long run is enormously pernicious, not just for the rule of law, but also for democracy. So I thank you for that question.
There's a gentleman here and a gentleman in the corner. You can keep your questions short because we sadly have very limited time.
Hi, my name is Peter Sweet. I was somewhat shocked by the arguments that were put forward, and I'd like to sort of give you a summary of them, if I may. The first speaker, Mr. Knox, I think, said that was making claims about what is right. Right is a very, in my words, in my thoughts, is a very big word. What is right to one is not an absolute. So that, and then make reference to Margaret Thatcher. I'm sure she's a wonderful lady, but she wasn't God-given, and she was also occasionally wrong. Now, I want to come to the second speaker from the Channel Islands, Fiona Poidevin. I can't read my own notes. But when she says the Channel Islands is largely compliant with legal issues, I'm an expert, please forgive me. That's more or less like saying she's largely not pregnant or largely pregnant. You know, one is either, I come from an IT background, and something is either compliant or it isn't, and there's nothing in between.
Sorry, what I can do is provide you afterwards with a table of the FATF recommendations. It's terminology that's used by the Financial Action Task Force. So there are compliant, largely compliant, partially compliant or non-compliant standards with each recommendation. So every country in the world is graded either compliant, largely compliant, partially compliant or non-compliant with each of those 49 recommendations. And Guernsey has scored the highest of any jurisdiction globally.
But it's not 100% compliant.
But then nobody is.
Nobody is. Nobody is in the world compliant.
The third speaker, Mr. Brooke, went to Professor, so I don't know.
I did ask people to keep the questions short.
It's quite a complex argument, but I'll finish it in a second. Was that we made reference to self as maximisation of public utilities. This is, if you like, saying that almost saying the opposite of the Thatcher argument is that they can do no right. And I wonder that he made reference to the capital accumulation being used to drive production, and then in the long term, his words, into wages. Well, that hasn't happened in the United States over a 30 or 40-year period. I'm sure you'd be aware of that. How long do you have to wait? And lastly, the last speaker, Mr. Magen, made a very interesting argument. Failed to mention one word: risk. Those are the points I wanted to make. Sorry, there's lots of them.
Alex, I want to shortly address the problem with wage increases.
Yes, in the popular press in recent months especially, much has been made of the decoupling of wages from productivity. And so there's been many articles in the Wall Street Journal, for example, arguing that the average median wage has actually become uncoupled from labor productivity. We still see labor productivity going up, but we seem to observe stagnating median income. Stagnating income for the median household. Without getting too technical, that's largely an artifact of the way that we're counting. A lot of the accounting categories are themselves not accurately reflective of the underlying economic trends, such that we're mapping income sources into things So that's the briefest answer to the question, is that the way that we're keeping track of these things is not actually measuring most of what's important. And there are actually some very easy transformations you can make for the data where, once again, unsurprisingly, labor productivity will pretty closely track wages. It would be very surprising if that decoupling persisted for any great period of time, because if it did, that would represent a pure profit opportunity for firms to hire one specific type of labor. And since I think that firms are trying to make as much profit as they can, they wouldn't just leave money on the table by consistently underpaying their workers. That assumes that firms are not trying to make as much money as they can.
Thank you. We'll take a final question with the gentleman by the fireplace there.
I'll keep this short. To what extent can you simply address and push the argument back at the critics of international financial centres, or tax havens as they're often called with the slides here, by simply pointing out that those who want to fight against these places are arguing for what the Cato Institute's Dan Mitchell has called a tax cartel. Now, cartels are bad. We were told this in our economics textbooks. Look at OPEC. So why is creating a tax cartel somehow seen as benign? It seems to me that if you focus on the cartelisation, which is essentially what a lot of people who are fighting against offshore locations are going for, then you can explain to people in a very powerful way why what's happening is harmful.
I think that's a very good point, and I can't imagine that there's anyone who disagrees. Sorry to bring things to rapid conclusion, but I'm very grateful to all the panelists. Before thanking them properly, I'd just very much like to bring to your attention an event which you might or might not wish to go to tomorrow. This came from our friends at Oxfam, and I quote, "On the day of the government summit tomorrow, Oxfam will transform London's iconic Trafalgar Square into an interactive tropical tax haven with dozens of volunteers in business suits, playing beach games and relaxing on deck chairs in an eye-catching stunt to increase public pressure on the Prime Minister and world leaders to agree plans to end the era of tax havens." I'm sure they're delighted to see us all there for it. Will you join me in thanking Fiona and its Amichai for the fascinating